In this lecture, we're going to talk about why you need to have investment analysis. If you're going to be serious in terms of investing in real estate, you need to know how to tell good investments from bad investments. So let's get started. If we, on a very basic level, break down investing in three really simple steps, we can think of it like this. There's a first step where you buy the asset or you buy the property. And when you buy the property, this is where you determine the profit potential. What I mean by that is if you overpay for something, it doesn't matter what you do to it, you're not going to be able to realize the full profit potential from that property. You got to pay the right price. And part of investment analysis allows you to determine what the right price is. The second part of the investment is that you usually do some sort of work. Now, in a fix and flip, that's where you put in the renovations, you make the place nice, you replace the floors or the kitchen or the bathroom. And how well you execute on this plan or your work, that's where you can maximize your profits or how much of the potential you could actually realize. So let's say you bought it at a great price, but you didn't execute well on the renovations. It cost twice as much, it took you twice as long. Well, you're not going to be able to realize the full potential that you started out with. But let's say now you've done your work, then the third part really is when you sell it, and that's when you actually realize your profits. So if you look at investments in these three phases, the first part, your purchase, determines your profit potential. The work allows you to maximize that potential. And then when you sell it, you actually realize the profits. Now, let's imagine you were at a bar and you are given the task of hitting the bullseye board with darts. But before you enter the room, you've been blindfolded. And now you don't even know which direction the board is in. So you'd be lucky to hit the bullseye, let alone hit the board, right? And if you imagine making investments blindfolded, that wouldn't be a really good idea either. You're going to have a lot of misses and you're probably going to lose money. The idea of investment analysis is to pull the blinds off so that you can see where the bullseyes are, where the boards are. Maybe there are different boards, and maybe some boards are better suited for your goals, right? And then the analysis allows you to determine how you can actually hit the bullseye that you're looking for. So investment analysis takes the blindfolds off and helps you answer some very, very important questions when it comes to real estate investing. Questions like, how much should you pay? Is it a steal or are you making a big mistake in overpaying? What is the most you could afford to pay for that property? Do you have enough funds? Investment analysis allows you to understand how much funds you need in order to not just purchase the property, but to execute on your renovation plans or any other plans, and to get your property to where you can sell it. It tells you how much you need and when you need it by. And if you do need help from investment partners, what would that look like? Or if you need to get a loan, how would that impact your investment? Are your renovations too costly? Doing the analysis allows you to determine what renovations are relevant and how much you could spend on it. Because you can buy a great property, but if you waste the money that you invested by putting in a whole bunch of stuff in the property that nobody wants, then you're going to waste money on that property and you're not going to get the returns that you want. Running analysis can help you determine and prioritize what's relevant to do for your renovations. And can you sell it for enough? Part of investment analysis is thinking about, well, what can you ultimately sell the property for, when you're going to sell it for? And if you're not selling it, can you collect enough rents over the time that you're holding it where your returns are very attractive, where it makes sense for you to make that investment? And one of the most important things about investment analysis is, especially if you're becoming a more serious investor, is you're not going to be faced with just one investment opportunity. Most of the time, you're going to be faced with multiple opportunities. And you want to be able to tell the difference between these investment opportunities. And the thing about investment opportunities is even if you're looking at something similar, they're not going to look exactly the same. They're going to have different purchase prices. Their amenities are going to be different. One's going to be bigger, one's going to be smaller, one's going to be in a different neighborhood than another. And you're going to need a way that allows you to compare them in a more apples to apples manner so that you can make the better choice. Ultimately, investment analysis is a way for you to sift through the junk that's out there in terms of investment opportunities and allow you to find that gem so that you can invest in opportunities that really make sense. Now, in the next two lectures, we're going to do something that will allow you to get a feel for what investment analysis is like in a few short minutes. I'm going to show you how to evaluate your own rental income property using what's called a back of the envelope analysis. And what we're going to do is in the next lecture, I'm going to show you how to find a property online, do some research, and gather some relevant information. And then in the following lecture, you're going to use the analysis model, the investment model that I've attached to that lecture. You're going to download it, and then you're going to follow along and use what you've just found to evaluate that property. So in the next two lectures, you're going to evaluate your own rental income property. All right, let's get started.